Hi, everyone. Welcome. Thanks for joining us today. We'll just give people a couple more minutes to trickle in here before we get started. All right. Looks like we've got a pretty good group online here. We'll just give folks one more minute. Okay. I think we've reached a steady state of people jumping online, so we'll go ahead and get started. Hi, everyone, and welcome. Thanks for joining us for today's webinar, Fundraising in 2026, What High-Performing IR Teams Are Doing Differently. My name is Ray Grant from Altvia. We're a technology platform provider for fundraising, fund ops, and investing, and I'll be moderating today's conversation. So thanks again, everyone, for taking the time today. Before we get started and introduce our speakers, just a couple quick housekeeping items. This session's being recorded, and we'll share it afterwards. We have a Q&A box in the Zoom here, so feel free to throw those in the chat. This session, I'll share a few slides to kick us off, but it'll be conversational, so feel free to chime in, and we'll try to save some time at the end to address any questions we don't get to during the conversation as well. So yeah, to kick us off, we're really excited to have our first webinar of the year focused on trends in capital raising and IR for private market investors. So as you all know, for the past couple of years at these sorts of speaking events, the discourse has pretty much centered around macro headwinds, liquidity restraints, uncertainty. So we're hoping in 2026, as some of that pressure is beginning to ease, but we know that doesn't mean it's getting any easier to fundraise for GPs and fund managers. So we are really excited today to have attendees with a wealth of knowledge and experience from both the GP and LP perspectives. And so, yeah, excited to have this conversation today with Jeff and now recurring Altvia webinar guest, Matt. So yeah, Jeff, why don't you kick us off with a quick intro on yourself and TritonLake?
Yes, hi everyone. So I'm Jeff Willems. I look after client onboarding and fundraising operations at TritonLake. TritonLake is a placement agent. We are primarily focused on North America, but we do have also a footprint in Europe and Asia. And we do fundraise across the private equity asset class, really the full range of the asset class. But we do focus on the lower middle market. And within that, at the moment, we do see a lot of traction around buyout. And then in terms of the LPs that we included our network, it's a very broad network, and family offices, single and multiple family offices, or CIOs, endowments, fund of funds, and also wealth managers are included in that.
Great. Thanks, Jeff. Matt?
Thanks, Ray. Really appreciate you inviting me back. So Matt Curtolo, I now manage my own advisory firm where I work with both GPs and LPs. My career spanned about 22 years in institutional LP roles at firms like Hamilton Lane, Hurdle Callahan, MetLife. I was an early employee at startup Allocate, where we were focused on venture capital and private wealth. So my background really lent itself well to being able to provide advice and feedback to GPs on not just how to think about fundraising, but how to really bring things into practice from what LPs want to see, that lens. And then with LPs, similarly, thinking about how to cover the market and how to understand what the best way to build an institutional portfolio and program is.
Awesome. Thanks, Matt, and thank you both for joining us again today. So for the agenda for today's conversation, as the title suggests, we'll start high level and talk about fundraising in 2026, market trends, what we're seeing differently this year from previous years. Then getting more specific about what that looks like on the ground, how are good market leading IR teams staying relevant with LPs. A lot of what we're hearing is LP diligence motions are transforming into a more continuous motion and less of a episodic type of diligence where staying in touch with LPs, during, between, and after fundraisers is increasingly important. So how are IR teams doing that effectively? We'll touch on that. We'll touch on more specifically what good IR teams are doing with data, and obviously with AI as well, we'll touch on. And hoping everyone can take a couple of quick wins away from today and things that you can apply at your firm. So to set the stage on the first topic of the IR landscape in 2026 in private capital markets, just a few high-level statistics that we thought were interesting. So starting off, 61% of capital raised in 25 flowed to firms with 10 plus prior funds. So that highlights a trend that we're all aware of in terms of consolidation of allocations into larger fund managers and increasingly difficult environment for emerging and mid-market managers. Then moving to the right, 18 months, that's the new average PE fundraising life cycle in 2025. So that's down just a tick from 19 months in 2024, but still significantly higher than our peaks in 2019, 2020, as we know. Then an interesting stat that we pulled from an Irwin report here. So in spite of those headwinds, only 33% of IR teams surveyed in this report operate with any formal KPIs, and most of those aren't even measured effectively. So that's meaning obviously every IR team is operating with a ton of daily activity from all of its members, with its LPs, but those metrics aren't necessarily being tied to business impact or being tied to reportable metrics on all that activity. So still a lot of work to do in our industry in terms of how folks are using data and reporting on their activity. Then overall, a slight downtick, 11% in global PE fundraising in 2025. So we'll transition there, and I'll stop sharing my screen and jump into the conversation. So yeah, starting high level, starting with you, Jeff, what do you see in 2026 going into this year that's different in the fundraising market compared to previous years?
Yeah, I think nothing hugely different. I mean, it's more of a progression, but definitely what we see is that, as you pointed out, the fundraising environment remains challenging, and that's not to say that. I think definitely we see that we've turned the corner and we see that there is interest, particularly in the lower middle market where, emerging managers, middle-sized managers can deliver value creation. So there's definitely an interest from LPs. in investing in that and benefiting from that experience and I suppose expertise that those managers have to offer. But it remains competitive because the bar, I suppose, the bar gets higher in terms of engagement with new relationships from the perspective of an LP. So really what we see is that LPs are trying to build long-term relationships with managers that they can work with over several funds over time. So that means one thing is that they tend to re-up a lot with managers that they already have a long-standing relationship with. So that's already one form of competition. But then after that, really you need to invest, you need to invest the time in building that relationship. And sometimes that doesn't happen in one fundraising cycle, or it doesn't happen in one meeting. It's a process that takes time and requires resources and effort. And then also, I mean, obviously, with the implementation of technology on the LP side, it's LPs are probably able to put through due diligence more opportunities than before because they leverage technology to do that at scale. And I mean, obviously, that means that you might, instead of competing against one opportunity, you might be competing against, 5 or 6 that they are considering in parallel. So you need to differentiate yourself. You need to be responsive. But we definitely see LPs getting more sophisticated in the sense that, if you take the less sophisticated approach where, you invest with a manager and you kind of, leave them at it and just focus on seeing the returns at the end. Now we see a lot more hands-on. We see more of focus on co-investment, for example, where LPs will co-invest alongside a trusted manager, but also know, like, the relationship building happens earlier. We see interest in investing alongside independent sponsors, for example, that are seen as, the future emerging managers. So if you have a good track record as an independent sponsor, you can start there that LPs might, co-invest alongside you in maybe just a single deal as SPV, but then start building that relationship towards the ambition of launching a first fund and then subsequent funds after that. So yeah, so those are the main trends that we are seeing going into 2026.
Great. Thanks, Jeff. Yeah, Matt, what's your perspective going into this year?
Yeah, it's interesting because I think if we look in a 5-year window, you quoted the stats, like the median time of raising a fund in the late teens and early 2020s, you were seeing funds go up and down in under a year on average. And that's anomalous in the long-term history, but now you see what the number is today. And that is, to Jeff's point, it's been a progression. It's become a challenging market, both from macro perspective. And then there are all of these LP dynamics where it is concentrating capital with the perceived less risky, larger brand name firms, less incentive to trade out names. Hey, we've already done the work on this. Do we need to take any more risk? Do we need to, kind of do more work to find something to just fill a hole? So, excuse me, I think there's a bit more perspective that's coming into the market in 26. The analogy I always use is, as an allocator, you have to think about continuing to feed this investment machine, right? If you stop investing in the asset class, it is self-liquidating. So your exposure targets will start to run off. At some point, distributions will come back in size. Now, we could argue when that's going to be, but when that moment happens, your NAV drops, you become underallocated to the asset class, and then you have to ramp back up. So I think folks in 24 were cautious. Folks in 25 thought there was a break, and they were going to start putting more capital to work in the first quarter, which we see when we look at the data. But then most of 25 has been a slog, and even the year-end numbers really do show that it was a down year across asset classes. Really anything but big bulge bracket firms were down in terms of fundraising. So turning forward to 26, I think there's still optimism, right? At some point, we continue to have this conversation of when will the market crack? When will we start to see more liquidity? We hear talk about IPOs and about liquidity events, M&A coming back. So if and when that happens, I think people are ready to go and allocating. But I also think even if that, absent that dynamic, people are looking at it and like, boy, we really throttled back over the last 2 years. So there's a bit more incentive to put more capital to work in 26. I wouldn't say the crystal ball is clearer than it was 2 years ago, but I think there's a level of comfort in certain pockets of the market. Certainly, to Jeff's point, lower mid-market buyout rarely goes out of favor, but it couldn't be more on trend right now of buying small companies, growing them, less interest rate sensitivity, things that might be, maybe they don't borrow as much, venture capital as well. So I think you have pockets of the market where folks have been very driven and drawn to allocate more. But that's the dynamic I see. So the fundraising process, which we'll talk a little bit more, has had to evolve into building relationships over years and years versus 5 years ago when it was we could have a call and a quarter later you write a check.
Yeah, not so simple now. Well, thank you guys. That's a great way to kick it off. So a lot of great points there that we can transition into our next talking point about what this looks like on the ground in the world of LP diligence. LPs are looking for the more long-term relationships. They have more investment options. They're more sophisticated, yet they're committed to the asset class. So what does that look like on the ground from your perspective, Matt, to start? What is changing and how LPs diligence today? And to follow up on that, what are some red flags that they're looking for, in a GP?
Yeah, it has definitely evolved, right? I think both the way the GPs present themselves and I think the way LPs receive that. Jeff made the point earlier about, GPs they have to be always on. I always say always be fundraising. Best time to raise your next fund is the day after you close your last. So you're in a perpetual fundraising motion. How do you actually put that into tangible activity? It's having a data room that's always open, updating it with your quarterly reports. LPs want to see not, the lines versus dots analogy. They want to be able to follow managers over a long term, not just from a data perspective, but also from interactions. Great way to solve this is invite your prospective LPs to your annual meeting so they can kind of see that. So there's a lot more in terms of, I'll call them interim touch points, but really it's transitioning from the dot to the line for the GP to continue to keep that LP abreast of what's happening at their organization. Because there's an absolute truth to the point Jeff made. LPs are inundated with opportunities. I think in my highest year, sitting in all of my LP seats, we would see 500 to 600 opportunities a year. Last year was the first year I didn't have a proper LP seat, but I saw over 600 opportunities as an individual. So that's telling you something about, the market and where the reach is going. There is a lot of opportunity that's there, and LP attention span is a lot shorter than it used to be. So I think that's the other thing is you have to figure out how to stand out, how to make this a longer term progressive compounding relationship versus a cold outreach now and then a cold outreach when I'm raising my next fund. That's just not going to land as well. So the biggest thing I'd say for LPs, it's both the green flag and the red flag, is if you're not hearing from folks for a while, everybody's busy, so you can't expect a regular touch point unless you ask for it. But LPs want to see and hear if they're interested. This goes back to sort of the GP being able to gauge how interested LPs were during a fundraise if they didn't get there. How regularly of a cadence or how regular of a cadence do they want to be reached? If a GP is not calling me and I got really close on the prior fund, that starts to creep in, and you lose a little bit of the momentum that you were building, even if it didn't result in the commitment. So that's the thing now. Also, you can have the opposite effect of being over communicative. Of every week I'm coming to your town, let's grab a coffee. There has to be a reason to have those updates. So there's definitely an art to it, but LPs are inundated. Be respectful of that time. Give them lines, not dots. Let them see how you're progressing. And I think that will be the way that managers, they have to be playing the long game because, right, this is not going to convert even a single fund. The data point you had, right, 18 months on average. I know many funds that have been in the market for 2+ years. And you have to think about that. I've been having conversations. I've been cultivating these LP relationships. And now, I may not be back in market for another 2 years. So from that first point of contact to when I hope they commit, it could be 5, 6, 7 years. So I think the mentality also has to shift, and LPs can tell. But I'm curious what Jeff would say on that as well.
Yeah, no, great points. Yeah, it feels difficult, paradoxical environment where you have shorter attention spans and higher competition, yet trying to build those more deep, strong relationships with LPs. So yeah, what have you seen working well with LPs of today, Jeff?
Yeah, first of all, I agree with Matt, right? So it's important to build those relationships over time, as we covered, but it's also, I mean, in terms of you're asking about red flags, responsiveness really, is one big item in terms of when you're meeting an LP, you're in the process of fundraising. You have to make sure that their needs are being met and they're being met in a timely manner, right? Because I mean, we have seen most of the GPs we work with, and obviously we are helping them with that, but they will be very responsive, making sure that when additional information is needed or a follow-up call need to be organized, it happens promptly, that all of the information that's needed. Like you need to be very nimble in terms of the information you're able to provide. Okay, if they want to drill into your track record on one specific deal, even you need to get that information quickly in the format they need. And because the risk is if an LP has to start chasing you on information you have agreed to provide on a call, or if they have to chase you about a follow-up call to drill down into your track record, and you're too busy to make the time to meet them. I mean, again, like it's in the context of those parallel conversations, it's gonna erode trust, and they'll also put their focus elsewhere, and you might fall behind. So it's very important to have access to quality data that you can turn around quickly, make sure that you follow up on those actions that you have agreed to address. And as Matt pointed out, it's not only during the fundraising period, it has to extend beyond that. Particularly, you will meet LPs that will say to you that the timing is not right for them, but that they are really interested in your strategy, they are really interested in your team, and they want to be kept updated. And I suppose one big mistake that we can see happening there is that because you might be so focused on the fundraising or your next close, you might kind of forget about those LPs and just go, okay, well, I'll focus on the ones that are progressing. But keep in mind that, if an LP has expressed an interest to keep updated, that's part of that building relationship process. And over time, it will pay off if you put in the time to do exactly just that. Get them to know the team, get them to demonstrate your track record over time, build a relationship. The next time you go to market, you'll already have a warm pipeline waiting for you. And that's critical nowadays for success.
Yeah, and easier said than done, I'm sure. Remaining responsive and nimble to your, active fundraising requests and keeping in touch with those folks who you're keeping warm. So yeah, that's great. Thank you guys. I guess at risk of all my questions being negative and doom and gloom, anything from your perspective, Jeff, that's been a real, green flag from the perspective of an LP or a way that you've seen IR teams differentiating themselves in their process there, outside of the responsiveness.
Yeah, absolutely. So first of all, what you want to do is you want to make sure that you're helping the LPs that you're contacting, and that means that you have to be. It sounds counterintuitive, but you need to be broad in your outreach, right? Because you want to diversify your LP base, so you want to be in contact with as many LPs as you can, really, to maximize your chances as part of your fundraising. But you also want to be very targeted in the sense that you need to be relevant to the LPs that you're contacting. And we do really try to do that with the GPs that we service, in the sense that we offer them a broad range of LPs, but we will say to them, you need to contact LPs that obviously will be interested in your strategy. And that sounds very basic, but it does happen that sometimes you see a scattergun approach where you're just sending emails to LPs about a strategy, or and keep chasing them, and they've never been interested in the specific proposition that you're putting in front of them. So it's very important to put in the research so that you're being relevant, and then you need to be able to differentiate yourself. And that means being able to to deliver a story about a bit like an elevator pitch, but really information that kind of shows them clearly, and in a succinct, in a brief manner, what are your selling points that will differentiate you. So it's very important to be clear, and to have those points made early in the process, so that at a glance they can qualify you in a road. So it's important, the first step, you're relevant to them, you can clearly articulate your strategy, you can make those points about differentiation, and then that's a good start. That's a green flag that will start the conversation with them.
Yeah, I'm
Ray,
sure.
can I
Yeah.
jump in on that one? Because I think that is first, I like the flip of the tone. What's positive? What can people do? Jeff said something interesting there. He used the word listen and helpful. Those are two things that I think IR teams, just listening. I mean, this is fundamental and foundational to fundraising. But that first meeting you have with a new LP should be all. I mean, Jeff and the team at TritonLake, they're doing a lot of this work for you. But if you're an independent IR person and you're having a first conversation with someone, you need to listen. You need to see if this actually is going to be a fit for them, because you could go down the path of trying to cultivate this relationship. I use the phrase happy years, right? Folks want to hear what they want to hear. And if they get some signal, they may continue down that path. So listening is critical. And then being helpful, I think, is the other aspect of this. I think back in the day, we've all been around long enough where it was a fundraising role. Then it transitioned to investor relations. Now you see titles like capital formation, capital solutions. I think of it as relationship management, right? It's like this is that IR person, investor relations is so multifaceted. And I have such a deep respect for that role because it is internal champion, external outreach. It's got so many different hats. And I've written about this in the past of just how IR is such a difficult function. But I think thinking about it in a relationship management context of when you listen, you sort of understand the needs. And in a lot of cases, it's not self-serving in the moment, but let's say you're raising an infrastructure fund and the LP you're talking to is really looking for, lower private credit fund. You don't have that offering, but you may have a group that you've worked with and you can make a referral. So it's a little bit around ecosystem building, being helpful, paying it forward, because LPs remember that, right? Is who can I talk to that's really well connected when the time comes where there's an active opportunity with that manager, that they're going to remember that element of helpfulness, and then translate that into, this is probably how they run their business. This is a positive vibe. This is a green flag. So I think both of those things, in a world where it's difficult to differentiate with just slides and a story, the actions, I think, go a long way.
Yeah, that's great points. And like you said, it's an art form, not necessarily a science, but there's some science we can try to apply. I know, Jeff, having worked with you in the past, that Triton Lake does a good job, I guess, in how it tiers LPs as it relates to your engagement in terms of, keeping track of those LPs where the timing isn't right or that you're trying to nurture relationships. So more from an internal operation standpoint, from the IR perspective, what has worked well to be able to execute on these strategies for you?
Yeah, so first of all, to go back to being relevant. So basically, what we do, and that I suppose Altvia is central to that there, but we do capture data points on the investment preferences of LPs that are in our network, right? So that means we'll capture information such as what asset class are they interested in, what geographical focus do they have, sector information, ticket size, fund size they're interested in. So we'll make sure that all of that information is taken into account when we go to market with a product, so that we are highly relevant to their needs, right? But then we'll also, because we deal slightly different proposition for us, because we deal with a broad range of LPs. It's a wide enough network. So basically, you also need to keep track of what they are at. When is the last time we had a touch point with them? What was it about? Where are they in the investment cycle? And then what opportunities are they looking at the moment, and what stage those opportunities are at? You have some opportunities that are at the qualification stage, and then there are opportunities that are further advanced. And based on that, the touch points might happen more frequently or not. So we do have workflows on data points to kind of help advisory teams and IR teams know when it's appropriate to contact or not contact an LP, and make sure that you don't forget about an LP that may be in an advanced stage and you haven't contacted them over a number of days. So you need to address that. So we do basically rely a lot on data for that, and technology as an enabler, making sure that, you won't replace relationships. That's crucial. Relationships is the driver here, but you can use technology and data points to kind of make sure that you respond in a timely manner, that you don't forget about any LPs, but that you don't contact them with irrelevant information, or you don't hassle them either, because that's something you don't want to do. And we also segment our LPs based on the type of engagement relationship they enjoy. So it ranges from a high level of partnership where you can send opportunities to an LP and they'll come back to you very quickly with feedback, whether it's a yes or a no or a maybe or what. And then you have and these are relationships that want to hear from you. They are okay about you chasing them, saying, have you looked at this, and what are your thoughts? Then at the other end of the spectrum, where you have relationship where they clearly say, we want to see deal flow, but unless you hear back from us, leave us alone. We are doing our due diligence work, and if there is something interesting, we'll come back to you. And you need to tweak your approach based on their preferences as well in terms of engagement, and make sure that you act accordingly. Again, you can support yourself through data and technology to make sure that the way you handle the relationship is appropriate.
That's great. Yeah, and thank you for bringing up the point of data. That's obviously core to driving all these workflows. And we know in our space, there's a lot of these relationships that are being managed in inboxes and in spreadsheets, just the nature of things, and that can work to a point, but not to operate at the scale I imagine TritonLake's operating at. So yeah, Matt, what have you seen well from a internal operations perspective in terms of a firm's use of data that has sort of differentiated them?
Yeah, differentiated might be strong, but I think it definitely the absence of it is a big red flag, right? I think Jeff said it well, right? If you think about Dunbar's number, right, it's you can have 150 relationships that your brain can really handle, and over and above that, you start to lose context. I would say most IR database or system should have multiples of that, right? In terms of folks that you've reached out to, especially if you're a mature firm, you need detailed notes about those folks. And as much as we believe, and I think skilled folks can remember those nuggets around certain relationships, you really need context on these relationships. And I think the way that systems, if we just think about note takers now, right, you can get transcripts of every call that you're on, recordings, whatever it is. You can have AI analyze those to be able to capture what are the salient points. So where, Jeff or I would have been taking handwritten notes and transcribing them into a system, and maybe we didn't get to that for 2 or 3 or a month, or there's a lag in terms of that manual process. You're just fast tracking your ability to have information in a system, to be able to track, to be able to set milestones. I always use this what when framework, which I talk about with GPs, is ask LPs what they need to see and when they want to hear from you again. And you need to record that. So when one of those are triggered, to Jeff's point, is like that gives you the impetus to reach back out. They're not telling you reach out to me whenever whenever you feel like it, or if there's something relevant that you want to share with me, go ahead. They're saying there's a specific thing that I want to see or to happen, a first close, a next deal, whatever it might be, or we're booked up until Q2. So you can put those into a system. It goes back to listening. It goes back to making sure that you can put that quickly and efficiently into a database or a system that can then build the prompts so you don't have to remember that for thousands of LPs. So I think that where it falls down is when somebody's emailing me cold. It's happened this week. They had just sent me an opportunity last week. They said, I can't remember if I sent this to you, but here it is in case. So that's something that it stands out because that everybody's prone to mistakes. No one's perfect. But the fact that that's not something that's flagged in a system that you can go check, you take that into your database and your mosaic as you underwrite a GP.
Yeah. Yeah. And that's obviously, I think, best practice is maintaining that database, having a central source of truth for all those investor notes and preferences. But I think it's another thing to then take that data and actually convert it into timely and relevant communication to your LPs. So, Jeff, can you describe anything specifically you've done with technology that has been able to sort of translate that data into business success stories for you?
Yeah, again, we use workflows. So basically, for our advisory team, what we have is dashboards when they come in the morning. So basically, any fundraising opportunity that has reached a stage, beyond qualification and that is progressing, they'll be reminded to follow up on that. So we use the dashboard where basically, if it's been say for illustration, a week since you haven't been in touch with an LP that is in advanced stages on a fundraising record, you'll be reminded to contact them. But also it will take into consideration if you contacted them about something else in the meantime, so that you don't do something like reaching out to an LP with a new opportunity in the morning and then following up about another 10 minutes later, So all of those workflows are taking that into consideration. But we also use tasks, like in the Altvia platform, you can set up tasks that are specific to an action. So the advisory team can put a specific action at a specific date to follow up with an LP as well, and they'll be reminded. And then finally, in terms of qualification, we do also have a separate workflow that reminds advisors to follow up on qualifying opportunities with LPs. But again, it will do it in such a way that it will prompt them to follow up with LPs that want you to follow up with them, and not with LPs that want you to leave them alone managing that pipeline. So Yeah, and I mean, again, dashboards and tasks are a couple of functionality that we use for that.
That's great. Yeah, that's powerful stuff, and it sounds simple, but I know from experience that's hard to implement, effectively. So probably a good transition to our AI talking point. I think data is the lifeblood of it. And if the data is not there, then the AI is going to be, noise for you. But Matt, have you seen AI leveraged, in fundraising or even on the LP side as well? And how's this changing the fundraising environment?
Yeah, this is going to be embedded in every part of what we do if it is not already. So I think the pace of adoption with AI, you had this stat earlier, it's going to continue step function to the point where it is second nature. But I do think in this period, if we're talking about the last 12 to 18 months when AI tools have become more ubiquitous, what's been really helpful is to kind of have a chatbot sitting on top of a data room as an LP. You can ask questions of where can I find ownership percentages in these companies, or ask a direct question, and you can just have that as a pseudo analyst or as somebody who's doing a lot of the digging for you. It's amazing. When I first started using one of those about last year, I said, this is incredible. Now everybody has them. So I think the pace of that, it's hard to say today uh, what's going to be ubiquitous and what's going to be really innovative and groundbreaking. But I think all of these efficiency gains for an LP, where I can review more things, I can get directly to what I want to get to, versus the old methods of pulling everything down, building my own models and templates. I mean, you can also think about the ways you can analyze. LPs will use all of that data now to help at least start to build an investment committee memo and things like that. So you think about those tools as a GP, as an IR team, you want to build that capability to, I would say, serve it up on a silver platter for the LPs so they don't have to work too hard. If it's easier, they tend to do it. I took a deep breath there. I was going to say LPs are lazy by nature, but that's not entirely true. But I think you just make everybody's life easier by availing yourself with these types of tools to be able to push that forward. But it also cuts both ways. If you lean too heavily on it, the number of automated LinkedIn messages, emails that and automated or AI generated emails where you can tell there's not really been a personal touch to it, goes back to the relationship centricity of this business. I think you want to use AI as an enhancement rather than a replacement for the human touch or the human in the loop. So trying to put yourself, yes, how can I spend this hour in a way more effective way than digging through spreadsheets or typing up the initial draft of an email, whatever it might be. So really elevating your time spent on certain tasks. And that's, I think, say on the LP side, definitely helpful as you do your underwriting and due diligence. And then on the GP side, making sure you don't go too heavily into it, that you remove yourself from the process. Back to the point of differentiation. Like if you're generating a bulk email and there's nothing in it that speaks to how you talk to folks or how you know folks, LPs are going to be able to sniff that out.
Yeah. Yep. Jeff, obviously you've been able to have a lot of success with traditional database tools and reporting, driving your processes there, but are you thinking about integrating AI into those processes for LP communication?
Yeah, absolutely. And 100% agree with what Matt has said, in terms of, the areas for application, but also in terms of having it at the service of human relationships rather than a replacement for it. I think that's key. I mean, other examples beyond I was going to mention a couple of examples that Matt was talking about, but other things you can do with AI already today is that if AI is sitting on top of your CRM, for example, and you're trying to, you know, create touch point or make the touch points you have with LPs very relevant, you can use those assistants to query the data. So for example, I'm in Chicago next week, who can I meet over there that, I've been speaking to, have active conversation with, that is based in the area, or that, that expressed an interest in my strategy. You can even just, using plain English or speaking to the assistant, ask them that, they give you the report. You're going to a conference, same thing. You can look at, what you can show in a list of attendees from an event that you're attending, and basically saying to the AI, okay, well, tell me which relationship in there do I know, which ones are relevant that I could set up meeting with, look at my agenda and give me kind of open slots that I can offer to those people. So there's a lot of things you can do there with AI, but I think definitely from our perspective, what we are looking at is agentic AI, and it's like to enhance what we were speaking about, those workflows, is that to go one step further, where an AI agent can actually write content, prepare email for the advisory team, or respond to very easy prompt, like say, for example, if an LP comes back and say, oh, this is interesting, can you send me the deck? The AI agent can pick that up and say, okay, well, I touched the deck, I respond, right? But one thing for consideration there is that, the likes of the regulators, FINRA is looking at that already. It's an area that's going to be regulated. You need to make sure that your agentic AI takes into consideration compliance, SEC marketing rule, FINRA marketing communication rules. You want the language to be compliant. You want to make sure that communications are being done within the rules. And again, at this stage, it's still going to be very much agentic AI writing email and putting it in the inbox of the advisory team, where a human will review the content, validate it before it's being sent out, right? We're still quite of a big step away from having an AI agent speaking directly to LPs. But again, it should always be, as Matt said, to enable the relationship, and the human relationship is key. You won't be replacing it. It's not advisable either.
Yeah. Yeah, and from that same Irwin report, we pulled the stat that 42% of IR teams are reporting active adoption of AI now, compared to just 6% in 2024. So, obviously pretty remarkable uptick, but honestly, maybe not as high as I would think. Everyone claims to be adopting it, but we're only getting 42% behind the survey. So yeah, a long way to go, but I think all the themes we've harped on today in terms of proper data capture, relevant communication, and then using that data, AI is going to have a potential impact on every step of that workflow. So great, thank you guys. So just to start wrapping us up here, great conversation today, and I wish we had more time, but to sort of circle back on some of the key themes from my perspective, it's been, the long-term relationships. How do you build those? How do you, adjust firm operations, use of data to execute on building long-term relationships and changing your mentality from more of a transactional, relationship to more of a long-term one, has been a key theme, along with LPs, hopefully continuing to commit to this asset class, and with even more competition and investment opportunities across the board for them. So shorter attention spans and time. So, increasing the importance of having impactful communication and relevant communication, targeted, responsive communication, and things that will make your firm stand out. So I guess to wrap us up with any parting words, Matt, you first. Any sort of parting thoughts for our group here, or words of inspiration for 2026?
Yeah, I mean, I spend a lot of my time with with venture capitalists. So there's always optimism in my blood. And I think that's the future is going to be better than the past kind of mentality. I do think all of what we talked about today, uh, it ran around the same topic of organization. These are things inside of your control within an organization. You can't make an LP commit to a fund, but you can certainly optimize how you run your operations, how you implement systems, how you talk about workflows, that can make your job easier and make that path maybe a little less rocky. It doesn't change the outcome necessarily, because at the end of the day, you have to find an LP who wants what you're selling. But all of these things being organized are all inside of the control of the GP organization. And with that, I think you have to understand that in the absence, I don't want to call it table stakes because none of this is particularly easy, but the absence of any of these things will shine a light in a negative direction. So just be focused on what's the line? Control the controllables, all the things that are inside your four walls, be organized, be proactive, do all the things that you can do, continue to learn and adopt new technology. But that's sort of what I would wrap up with.
Thanks, Matt. Jeff, any parting thoughts?
Yeah, I agree. I think it's very positive to see that there is a focus on long-term relationships, and that, the bar is getting higher on selecting managers and all that, because it does show a genuine uh, maturity in the industry in terms of the way it's progressing, which is good. And then in terms of what we spoke about and the use of technology, I think just summarize it as technology at the service of relationships, at the service of human relationships. And we hear a lot about AI that sometimes sounds a bit scary and doomsday scenarios and all that. But I think if it's used to enable humans and relationships, it's definitely technology can be a powerful instrument that we should all look to adopt.
Great. Well, with that, we'll wrap up. But thank you, Jeff. Thank you, Matt, so much for the insights and for taking the time today. And thank you for everyone who jumped on and took the time to be a part of the conversation today. We'll follow up with the recording, and if you'd like to learn more about what Altvia is doing to support LP relationship management or the great work that Matt and Jeff are doing, we'll follow up with contact information for all of us as well.
Excellent. Thanks,
Thank you
Ray.
very
Thank you.
much and have a great week. Bye-bye.